just in any sort of situation where you're dealing with a licensed individual, there has to be a certain amount of comfort that they have to have whenever you're sitting across from them, that they know that you understand the nuance of very complex products, which can immensely help people and immensely hurt people sometimes if they don't understand what they're buying. And so I think that whenever you're dealing with any sort of financial services representative, whether it's an insurance person, a syndicator, an operator, an analyst, a hedge fund person, having a certain level of understanding and comfort with knowing your product, I think goes a long way. And then being able to take that and translate that into strategic and creative things that translate and communicate to the end customer, the consumer, I think that's really where the magic happens.
Welcome back to the Real Estate Syndication Podcast with Whitney Sewell. And as I joke, it is not Whitney Sewell who's on this recording today. It's myself, Josh McCowan. Very honored to guest host for the world famous Whitney Sewell. Gotten to know Whitney for years. He's invested with us and we love him. And we both love podcasting. So I am so honored to be part of the podcasting community with you. And I'm also part of the Real Estate Syndication Podcast listening community. Listen every week and enjoy at least a show or two every week. So big honor here. Today is a delight. We have a gentleman all the way through the ether from Dallas, not Dallas, I should say that. I'll correct that in a minute. We're from Texas because we have Justin Liggitt from DJE Texas Management Group. Really excited to get to know his backstory. He himself is worthy of a whole podcast episode about his career from art to master investor relations character. Good, great guy. Looking forward to learning a lot. So without any delay, I want to grab the guy out of the green room. Welcome to the big show, Justin.
Thank you for having me. How you doing?
It's good to have you here, buddy. You're in a fancy podcast studio. We're glad to see you're pro.
Yeah, this is our podcast studio in our brand new headquarters in downtown San Antonio. We're in this smart building that we just got done renovating, got the CFO this week, and are moving in.
Man, we have a lot to talk about. I want to start with the obvious. Well, before we get into questions, the listeners who have not yet met you yet, why don't we ask you for a brief backstory? And maybe, do you have a family? Have you always lived in San Antonio? Why don't you share a little more about yourself?
Sure. I'm Director of Investor Relations for DJE here in San Antonio, Texas. I've been here with DJE for a few years now. And essentially, I'm responsible for raising all the capital at the firm, but also just establishing and maintaining the investor experience here at our firm. I have a little over 20 or so years of experience in marketing and investor relations, specific in the investment and financial services world. I was a financial advisor in a past life and also an artist, which kind of parlayed into a bit of a bent towards marketing in the financial services world over the last 10 or 15 years. And so it's really kind of allowed me to comprehensively kind of pull on my skill set, which has been really, really impactful and fulfilling for me. Outside of work, I'm a big plant person. I garden a lot. And like I said, always involved in creative pursuits. I'm a big volunteer myself as well, just with nonprofits here in the city. So amongst those things, that keeps me pretty busy. Also a father to a 9-year-old son who keeps me very, very busy as well.
What's that gentleman's name?
His name is Owen.
Great to meet Owen. Hey, Owen, I hope you're listening to your dad's big podcast. Justin, not many people get on this great show and talk about their art background. So what kind of art are you great at or passionate about from a young age?
I was always just a really good drawer and painter. I could take a picture and draw it just like a picture almost. And, I love it. And I still love it. But it kind of got to a point where I was in college and I had to try and legitimize and monetize, a very kind of tactile sort of skill set. And so I had just gotten my first email address. And then 2 weeks later, they're trying to teach me how to scan a document into a brand Macintosh, design worthy computer. And it just didn't connect. I had no wherewithal of leveraging a piece of technology to create something that was in my head. And so I faltered a little bit and I didn't want to hack it out in kind of graphic design and in design school for however long, or even just in an agency to try and make art director someday, because that's really what I wanted to do. But I always had an analytical background. And, at the time I was dating somebody whose father was an Edward Jones rep, and he seemed to kind of have it figured out and pulled together a little bit. So yeah, it's really weird how some kind of small people in your life kind of have a big effect on you. But at that point, I kind of moved over to finance and started studying and graduated with that degree and moved into basically my Series 7, 24, and 66 and got into the business.
Yep. And, when we're on this show, the real estate syndication show, sometimes we come at these, so many people who listen here are our passive investors. Others are active operators of syndication shows, companies. And not all of us come from the same background. So your background came from the licensed public securities. Edward Jones, is that what you said earlier? Did you end up going down that road?
No. He was with Edward Jones. I actually started with a company called AXA.
Okay, AXA, sure. So when you come from that background, you've actually also shared with me earlier that your journey included joining a group before this group where you helped put a private REIT together.
Yeah.
So
Reg A REIT.
Yeah, you have a great perspective. So let's talk about that. Let's talk about what is a private REIT. Let's just define a few things for people. Can you start at the top? People will love to learn.
Yeah, real estate investment trust, where basically, it looks and feels a lot almost like a mutual fund, but it's not technically a mutual fund. But it's basically a way for investment funds or companies to pool investor capital to invest in private market real estate. And in this case, it was taking advantage of a recent, I think it was basically via the Jobs Act, the Reg A Plus changes and things like that allowed minimums to be very low to invest in private market real estate and things such as multifamily. And so this REIT, which I really kind of helped them get SEC approval, do a lot of the marketing, build the investor relations team, and then break escrow. They really kind of specialized in kind of workforce housing throughout the Sun Belt area, which was 3 to 5 years ago. Everybody was really trying to get in on that kind of thing. Yeah. And I really, really liked it. And I liked how detailed the project was. And I've always seemed to really excel in kind of being the go-between person between like the very kind of analytical, product-driven people where like you have to be able to sit across from a financial advisor and they have to feel like there's a certain amount of legitimacy of like, what they're going through and you've sat in their chair kind of thing. But at the same time, I could shift, turn and then start working with a graphic designer and work with them and collaborate with them in a way to where if I gave them a piece of challenging criticism or something like that, they wouldn't get wrapped around the axle. So I've kind of had this ability to kind of like work between the two different mindsets or brain types of people that are right brain, left brain kind of people. And that's kind of also from a creative standpoint, while I don't really do a whole lot of art anymore, from an activism standpoint, like I'm very much involved in creative nonprofits where in those roles, I'm very much kind of the same sort of person. Like I'm working between the executive leadership and the people who are doing site installations and art pieces and stuff like that. So I seem to work really well kind of between those two different types of people who are very analytical and detail driven and people who are just visionary kind of types.
And as we're going to learn a little more about DJE in a few moments, you've explained REIT really well, but you threw a comment in there that I think caught most of our listeners' ears, which was interesting. You said, sitting across the table, explaining that REIT's purpose to a financial advisor, because in that model, those REITs, who were the buyers? Was it direct retail lists or was it the financial advisors helping you reach their client?
Yeah, I mean, it was still so early that like they were still trying to figure out a lot of those things. Like what made the most sense, distribution, all of those sort of things. But just in any sort of situation where you're dealing with a licensed individual, there has to be a certain amount of comfort that they have to have whenever you're sitting across from them, that they know that you understand the nuance of very complex products, which can immensely help people and immensely hurt people sometimes if they don't understand what they're buying. And so I think that whenever you're dealing with any sort of financial services representative, whether it's an insurance person, a syndicator, an operator, an analyst, a hedge fund person, having a certain level of understanding and comfort with knowing your product, I think goes a long way. And then being able to take that and translate that into strategic and creative things that translate and communicate to the end customer, the consumer, I think that's really where the magic happens.
Yep. And so let's jump over to DJE, but at that time when you were with them in the private REIT, did they typically sell to brokerage houses that marketed to people, or did they do direct? People found them on the internet and went right through their portal?
Yeah. And it was one of the things I really liked about it was, it kind of had a very sort of altruistic bent of trying to get people who had no access or visibility, or even sometimes maybe even like literacy of private market real estate or multifamily or syndications and things of that nature, because of the investment minimums being so low and all of these sort of things, and being able to pool capital via a REIT structure. It was a very kind of idealistic and kind of altruistic sort of seen product. But sometimes whenever you're building a product, there's an uncomfortable moment where you're trying to figure out like your distribution, your investment minimums, what are your preferred distributions, like all these sort of things that you're dialing in. That what I've seen that in the fund structure, it's kind of like whenever we're doing single asset syndications, it's like, this is what it is and we're launching it kind of thing. And I think in the fund world, sometimes since they're able to do different tranches and different series and things like that, they can iterate and kind of like say, well, what worked about this series and like, what can we do differently on this one? Whereas we can do that, but we have to go out and spend another $20 million to do it.
So let's jump into today's world, DJE Texas Management. How would you describe their specialty and what Texas Management DJE Group does today?
I mean, we are a commercial real estate investment firm. We specialize and we have become known, especially in San Antonio, for value add multifamily, large value add multifamily, generally north of 150 to 200 units, specifically because we are vertically integrated and we have our own property management company here in-house and boots on the ground across San Antonio. And so over the years, that has amounted to over 5,000 units of multifamily here acquired here in the city limits, basically. But at the same time, we've also been able to keep our ear pretty low to the ground and be mindful of the relationships that have arisen or generated like over the years. And that's yielded new assets that are in the commercial realm, like ranch investments or.
Tell me about ranch investments. Time out for a minute. Okay. So you guys are very, very good at 5,000 units of density in the San Antonio market area, correct? Mm-hmm. That's your primary focus. Okay. Yeah. And you threw out the ranch assets. So what is a tip? What can you do commercially with a ranch?
We're basically buying big tracts of land, carving it up, selling it small, and forcing the appreciation at the per acre price at the smaller acreage amounts.
Now that's sounds like land development.
Yeah, but we have no odds trying to develop the land. We're trying to basically move it on to somebody who maybe has that idea or maybe even a different type of customer. I mean, we've kind of noticed just based off of the type of land that we're looking for and the identifying aspects of it, like no more than an hour away from a major metro area in San Antonio, in Texas. We're usually looking for a high presence of like wildlife, maybe even exotic wildlife as well, because that will draw kind of your professional hunters and very affluent types of hunters who have a very kind of expensive hobby set kind of thing and aren't particularly price sensitive to a lot of the things that we're experiencing in the debt markets and things like that right now. And so what we basically do is for investors though, because this was a type of project that we could have essentially, I think, ran with ourselves. We could have just bought these land and tried to parcel it out and move it on kind of thing. But we were like, we should give our investors part of this. That I think is from a values-based standpoint, very much speaks to how we carry ourselves and that we want to bring our investors in. We want to have kind of cut them in on something that we know is a good deal. So what we did in this situation was, and it was also kind of like a thought process of broadening our product line, is that we created it more as like a high yielding income kind of project for the investors to where they're on the debt side of the transaction for 12 months max. And they had a fixed preferred distribution at 10%. And then they get a 1% bonus exit at the 12 months whenever we exit everybody out. And so investors really like that because it's a nice complement to the long-term nature of the multifamily stuff. And especially for some of the investors in our book that are getting closer to retirement age and want to start thinking about, maintaining income streams and things like that. So that's been really good. And we kind of parlayed that same strategy and idea into industrial builds as well recently. So, that kind of mindset, that opportunistic viewpoint is not lost on kind of having a very value add bent and kind of backbone.
Yeah, well, what you're going to show up in people's radar when they're listening to this wonderful episode, they're going to be like, this is a different conversation. We're talking about ranches for a minute. I think this is really interesting. We're just going to spend another minute. So let's help frame it for our listeners. Let's say the last thing you guys purchased that was a ranch. How many acres was it when you purchased it?
1,650 acres.
1,650. And when you did your modification and sold it in pieces, what size did you sell it in pieces?
200 to 400 acreage amounts.
Okay, 200.
It vacillates because we have a business partner that is like a key part of our business here, but is not really a DJE employee that really kind of is completely plugged into this world. He sold Devin's first personal ranch years and years ago. So we just have a high level of comfort with his integrity, his proximity to the business. And then most importantly, this isn't like showing up at a multifamily asset and trying to buy it. This is a totally different seller. And you need somebody like this guy to be able to handle that sort of thing. And so that, but those all really kind of equate to the bottom line of competitive advantage for us.
And 200 to 400 acres, what would the acreage value be after you're done with it? Like what would you?
It vacillates. It vacillates from area to area.
Is it like 50,000 an acre in your mind?
It's not like a consistent amount because it varies so much from. Because One deal that we just closed on fundraising for this past week is out in East Texas. The per acre price for that is wildly different than in Brady, Texas, where the largest white-tailed deer in history was ever drug out of. So it's like, there's a lot of variability and there's a lot of factors that really kind of force those per acre prices. And sometimes it can literally just be like, man, it's really deersy and lots of hunters hang out there kind of thing.
Deersy. I've never heard that before.
Yeah, that's a term.
Very interesting. Very interesting. The only reason I was eager for you to come up with a basic per square foot of acreage values because we actually had a ranch under agreement, more than one actually at one point. But the whole Texas market's such an extractive thing, especially that hill country north of San Antonio. All right. I love all your different business plans. It sounds like you're also doing industrial build now. You're talking about that's development, right? That's you're going to build something and you're going to let investors. All right. So go back to this debt fund that you offered. Very, very attractive, 10% plus one on the out. Was that set up as a 506c syndication or was it set up as a debt REIT or how did you set that one up?
It's a 506B as in boy.
506B.
Yeah. So almost all of our deals are Bs. We do see value, I think, in working with certain non-accredited investors and sophisticated investors, especially whenever there's an alignment of values, personality, and work styles. And yeah, so those are all 506Bs in the way that we set them up.
And the minimum investment you like for those types of things?
50 across the board on all.
Me too. Deals. Me too. All right. So now let's get to the other cool things about your business. You're doing a great job presenting and representing DJE. How many investors do you currently service right now or serve?
We have over 600 active positions and investors. So I would say probably between 550 and 600 unique households.
That's really good. And of those investors, are any of them institutional investors that are placing money?
No, we work largely with individuals, trusts, high net worth, and influence.
So not like a pension fund or anything.
Yeah, we haven't gone that route yet. And, I don't foresee it necessarily in the future just because we haven't had to. We've been able to grow our business pretty effectively just by the deals and just focusing on what we're good at.
So then the types of funds, which I'm starting to understand are the 506B typically. And of the 506B, are they usually single asset?
Yeah, we're not doing any funds really. Everything's single asset. We did play around with like a debt fund right at the beginning of COVID, just because things were kind of weird and we were kind of trying to see like what would play with our investors and whatnot. And we learned some stuff with it. I think we might revisit that in 2023, like as far as the fund structure, just based off of or being responsive to a lot of things that are happening in the market and people looking to place capital, but placing capital being a little bit tough in the next 3 to 6 months. So we're looking at it. But yeah, I mean, I think that at the time, whenever we did it, deal flow, at least like once like the initial shock of COVID wore off, deal flow wasn't an issue for us. So like investors were looking at our debt fund being like, why would I take 6% whenever I can take a 7% preferred and hopefully net 24%, in 2-3 years kind of thing.
No, it makes a lot of sense. And then with the single asset deal, if you want to use an example for us, maybe pick out one of them that you just recently did. And it's over. It's a deal that's over. So we can talk about it. Let's say, what was the asset purchase price and what was the raise? How much did you need us to invest?
The last multifamily deal that we closed were 3 assets. It was a 3-pack with 600 units, all within 15 minutes of each other in north central San Antonio. The final price for those 3, I think, when it all got said and done, was like between 76 and 80, I believe.
Million. Million or 1,000 per room?
Million.
Yeah.
And then raised around 20 for it.
Yep. And you typically can do the raise. How long does it typically take for your group?
45 days, 45 to 60 days. Depending on the size. Usually, we close really quick and we're usually sending first distributions within a month and a half, 1 to 1.5 months.
And the model is typically value add, right? So you're going to be investing some capital on top of the acquisition.
Yeah.
And of that, if you spent the 78 million, I think it was, how much were you willing to invest in the turnaround capital? Like what's the ratio versus the purchase?
I'd have to look at it. This was back in April, so I'd have to look at what the actual CapEx budget was. I don't have it right in front of me, sort of thing. And I know that like one of the things that we really like about the integrated part of the property management is like even throughout the closing process and then takeover, bottom out, and then dealing with what we're dealing with right now, especially is just like the ability to really just be able to constantly monitor what's going on with like the Fed and debt service, what's going on with our renovation plans and like what can we defer, what can we pause, what can we speed up, all that kind of stuff. So, I don't remember exactly what the CapEx budget was, and especially because it kind of gets a little kludgy whenever you kind of break it down for each asset in that 3-pack. But I know that it's just a very kind of dynamic number, especially as we move through the takeover and bottom out process.
It's exciting to get to know this business. So tell us a little more about DJE and where it's going.
I mean, like I said, I'm podcasting today from our new podcast studio at our headquarters here in downtown San Antonio. This building is hundreds, maybe like 100, 200 years old. And it's an old historic building that we've renovated and kind of gutted on the inside, and we just moved in. But, whenever I joined DJE in February 2020 and like literally like COVID and shelter in place orders happened a couple weeks later, it was a weird time. But like I came on board and around the same time, Eli Acevedo, who is my boss, the chief operations officer and who runs the property management side of our business, that's the overwhelming majority of our headcount is people,
Sure.
The property managers, the leasing agents, the maintenance staff on, out in the field and everything like that. But I mean, like whenever we came on board, there was only we only had like a couple of active assets, and the ability for us to kind of like all work together and the way that we, I think, have really smartly and effectively scaled over the last 3 years has allowed us to really kind of buy the thousands of units that we have and also position ourselves in a way to where like we made good decisions as well during that time. Like we didn't blow and go and not buy rate caps.
Right.
Like, we didn't go like start running so fast that we weren't hitting our marks or doing the right thing. So that's what I'm really proud of as far as what I see for the future is that like we're positioned well, as far as our underwriting and the way that we inoculated our portfolio against what's happening right now. But at the same time, I just think that we're just a really, really strong, tight-knit and well put together team that is really good at just recognizing opportunity, executing on it and closing.
Yeah, I think that is nice that you inoculated the assets to the changing rates. I think.
It's like, and just there's certain things I think that we do just from a values-based standpoint, or just the way that we carry ourselves and respond to investors and communicate with them that I think was in response, like a lot of it was informed by COVID. And it's just stuff that we continue to do just because people were so overwhelmingly positive as far as like the response to it. But like one of the things that we did that I was out in the field the last couple of weeks, but in our last round of monthly updates to our investors for the investments, operational updates, breaking down rent collections, occupancy, what's going on with the CAP community improvements, all that kind of stuff. But we added a section of just like what's going on, what is the debt? Like what kind of loan do we have? Did we buy a rate cap? Where is it at right now? Like all this sort of thing. When does the rate cap expire? And people were just like so appreciative of that. And there was nothing that was like kind of like any sort of shock and awe or things to be concerned about. But they were just like, there's so many operators right now that are just dodging us and just not communicating with us kind of thing. And so like, that's one of the things that I'm really excited about the future is like that I feel like we're focusing on doing the right sort of things and just, kind of just building the right way.
You've answered that. You've got some really great points there. Really excited to check out more. Let me just get a sense though. So DJE founded what year?
2012.
Okay. Went right into multifamily, has built an incredible portfolio.
He did a lot of single family for years.
Oh, okay.
Long enough to realize that was not the asset and that he wasn't going to be able to scale the business effectively because Devin comes from a technology and kind of like a marketing and sales and technology background. And I think that was a big benefit in him kind of like objectively looking at the business and being like, this isn't right, or like, this isn't working for me. And that was really whenever he started to kind of develop his education in multifamily passive investing.
And also the future, you've brought up the ranch, you've brought up industrial, we all watch the news all over the country talks about how your area is getting some serious high tech investment, manufacturing of chips and things like that is coming back to America. What are you seeing as the future of DJE? How much will become multifamily, which you're going to always do, and then other programs? And what else are you doing other than ranches and industrial?
I think that like we're really excited about everything that's coming for San Antonio. UTSA is becoming like the preeminent and premier cybersecurity school in the country.
That is great.
All the things that you just talked about. I mean, like the area where the majority of our portfolio is centralized is like growing so crazy and just like in a really encouraging way to where there's like really nice restaurants, but also like Marathon Oil and like Valero and Victory Capital Management. All of these companies are moving their headquarters into kind of like the Northwest corridor of San Antonio out near the rim, near UTSA. And it's a really nice, clean area to live and work. And so I'm really excited about that. I'm really excited about San Antonio continuing to just be fertile ground for good investors and like kind of being a place that a town that's not worried about trying to suck up all the air in the room like Austin or Dallas is or anything like that.
So what do you mean by that? Suck up all the energy?
We don't want all the attention. We like being able to operate the way we operate.
Teach me this, because as a person who's been looking into joining assets down there, who takes when you talk about the area? You have San Antonio doing great, you have Austin doing great. The spheres of influence, do they overlap in the region? Right? You know what I mean? Like, does the foothills of Texas, do they consider the Texas foothills? Do they consider themselves a peripheral portion of San Antonio or of Austin?
Oh no, I've lived in Austin 2 separate times, like for probably a total of 10 to 15 years, and they would not allow themselves to be looped in with any other city.
Okay.
And I say that with all the love in the world for my Austinites. But I think that one of the things that I really like is that with everything that's going on in Austin, there's a huge, it's like the reverse gold rush, basically. California. Yeah. And California has just landed in Austin. And all my friends, all my artist friends, all my musician friends got priced out, and they moved out to like Lockhart, and which is like the barbecue capital of the world. And then further south into San Antonio, Seguin, San Marcos is really blowing up too for a college town, and also just, for overall investment. So I think that like what's happening as far as that migration from California into Austin, because that's like where they'll get the least amount of shell shock and culture shock, is kind of pushing a lot of stuff. And like, I'm stoked for longtime Austinites to come south to San Antonio, because it's like, they're sharp, smart, creative people. And I think that it'd be a good thing all around.
When we are wrapping up here, can I just ask you to share what we haven't covered that you're so excited about and what you're seeing in the market in San Antonio, and what investors from outside of Texas need to know about investing in Texas?
What I'm really excited about is the amount of opportunity that's on the horizon, and then the short-term horizon. Because I'm not trying to like compare it to like 2008, 2009 or anything like that, but I just remember having this feeling like if you were in a good spot, you were positioned well to capitalize on some pretty uncomfortable spots for people. What I'm really excited about is just kind of like picking our time and picking our move kind of thing. And just, I kind of almost equate it to like that scene in Braveheart whenever he's like, hold me down. That's what I'm waiting for.
I know exactly what you're talking about.
Because like we did a fundraise last week, and it filled up so quickly, and the average position amounts were so much higher than our usual.
And what was the asset though?
So much money on the sidelines. People are trying to put money to work whenever they have a deal that looks good. And so I'm really excited for things to just settle, normalize, and for things to get back to the business.
And by the way, was that a multifamily asset?
That was a ranch.
That was the ranch idea. I love talking to you. It sounds exciting what you're doing, and we appreciate you. How can listeners reach back out to you after the show?
www.djetexas.com. In the bottom right-hand corner, there's a prompt for a 15-minute consultation if you want to get on my calendar, or just holler at me at justin@djetexas.com.
Justin, absolute pleasure. Thanks for being here with us.
Thank you.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.